Good morning, everyone. It is Friday, January 9th, 2026. We are wrapping up a historic week defined by massive geopolitical shifts in Venezuela, a potential mega-merger in the mining sector that could reshape the global supply chain, and a defense sector rally sparked by President Trump's latest budget demands. While the Dow pushes for new highs, the Nasdaq is feeling the pressure. Here is everything you need to know about the markets in the last 24 hours. Let's start with the numbers. We saw a divergent session yesterday, with old economy stocks outperforming tech. Dow Jones Industrial Average closed higher, setting a new intraday record. The index was buoyed significantly by the defense and industrial sectors. S&P 500 finished flat to mixed. The broader market is pausing to digest the rapid geopolitical changes in South America. Nasdaq Composite closed lower. We are seeing a rotation out of tech as capital flows into defense and energy plays amidst the new administration's policy pivots. FTSE 100 closed at 10,035.63, down marginally by 0.1%. Despite the sluggish close, the index remains psychologically strong above the 10K mark, supported by a surge in BAE systems. FTSE 250 saw a decline of roughly 0.4%, closing around 22,782. Nikkei 225 and Kospi. Both indices have shown resilience this week, rallying on the back of regional security concerns which tend to boost heavy industry and defense stocks in Japan and South Korea. The biggest driver in the last 24 hours hasn't been economic data, but geopolitics and fiscal policy. The Trump defense bump. President Trump has sent shockwaves through the budget office and the markets by calling for a massive 50% increase in the U.S. defense budget. This announcement immediately lit a fire under defense contractors. Stock impact. We saw BAE Systems in London surge yesterday, and U.S. primes like Lockheed Martin and Northrop Grumman are trading with significant strength. The caveat, however, there is a catch. The president also stated he will not permit defense companies to issue dividends or stock buybacks with this new funding. Investors are currently ignoring the buyback ban and focusing purely on the revenue growth implied by such a massive budget expansion. The Venezuela situation, a new energy landscape. Following the dramatic capture of Nicolas Maduro by U.S. forces on January 3rd, the situation is evolving rapidly. U.S. oil intervention. President Trump announced yesterday that U.S. oil companies would go in, spend billions, and fix the badly broken infrastructure in Venezuela. This is being viewed as a prelude to a supply glut in the medium term, but a massive opportunity for U.S. energy services firms in the short term. Tanker seizures. On Wednesday, U.S. forces seized 2 oil tankers, including one flying a Russian flag, further asserting control over Venezuelan exports. Secretary of State Marco Rubio has clarified that while the U.S. is securing the energy infrastructure, Washington will not assume day-to-day governance, aiming to quell fears of a long-term occupation. The $260 billion mining mega-merger breaking news this morning. Rio Tinto and Glencore have reportedly restarted talks for a merger. Deal size. We are looking at a potential $260 billion deal. Implication. If this goes through, it creates the world's largest miner, consolidating control over copper, aluminum, and battery metals. This is a direct response to the resource nationalism we are seeing globally. Watch these 2 tickers closely today. Beyond the macro themes, we have significant individual stock news. Sainsbury's shares have taken a hit after the retailer blamed significant headwinds for a drop in Argos sales over the Christmas period. The consumer is still showing cracks in the discretionary spending armor. General Motors. A shocking report from GM shows a $7 billion earnings loss, largely attributed to their strategic pullback from EVs and restructuring costs. The auto giant is struggling to pivot in this new regulatory environment. Shell. Shares dropped in London yesterday, reacting to the lower oil price outlook as the market prices in the potential return of Venezuelan supply under U.S. management. Turning to the crypto markets, the narrative is shifting from price action to regulation and compliance. Chainalysis 2025 report. A major report released by Chainalysis reveals that illicit cryptocurrency activity topped $154 billion in 2025. Key detail. The report highlights that a significant portion of this was driven by state-backed actors evading sanctions, a point that is likely to accelerate the Trump administration's regulatory crackdown on non-compliant exchanges. Bitcoin is currently holding steady around the $94,000 level. It spiked earlier in the week to this level as a safe haven asset during the initial Venezuela military operation, but has since consolidated. The market is waiting to see if the regulatory hammer falls following the Chainalysis report. To wrap up, here are the exact quotes moving markets. President Donald Trump, on the defense sector. "I want the strongest military the world has ever seen, but I will not permit these companies to enrich shareholders with buybacks while we rebuild our arsenal." On Venezuela, we are going to have our very large U.S. oil companies go in, fix the infrastructure, and start making money for the country. Section of State Marco Rubio. "Our role is stabilization, not permanent governance." In summary, the market is pricing in a massive militarization of the budget, a consolidation of global resources, and a new era of U.S.-controlled energy supply from South America. Watch the defense stocks and the miners today. That is where the volume will be. I'll see you in the next update.